Cryptocurrency is making a bit of a resurgence, with the price of Bitcoin setting new highs seemingly every week. Tales of people starting new businesses, buying new homes, or otherwise getting rich off of crypto is pretty commonplace. Now we can add small business loans backed by Bitcoin to the mix thanks to LQD Business Finance. George Souri, CEO of this alternative lender, is here to discuss this type of financing. Hi, George. Thanks so much for taking out the time today.
You're welcome. My pleasure.
As you know, Bitcoin is hot. Heck, I even own some of it. Everyone's talking about it. And now you guys are coming out with a Bitcoin loan for small businesses. So how does this work? And is this the right time to bring this to the small business community?
Yeah, so that's a good question. So look, at the end of the day, Bitcoin is trending towards becoming a spendable currency, right? And from a small business's perspective, borrowing in Bitcoin for the sake of borrowing in Bitcoin doesn't really have any appeal, right? At the end of the day, if I'm a small business, I'm looking for capital to finance my AR, purchase inventory, invest in infrastructure, grow my business, right? Which means I need to be able to spend that money. Now, long term, Bitcoin as a spendable currency solves certain problems, particularly with international trade. So let's say I'm a distributor in the United States and I'm buying goods from China. Being able to pay in Bitcoin makes that process way more efficient. We're not there yet, right? So the intermediary step is, how do you connect holders of Bitcoin, right, with small businesses who are looking for additional liquidity and financing? And while our platform ultimately will lend in Bitcoin to small businesses, the intermediary step is establishing a platform where we're able to take Bitcoin, use that as essentially the liquidity vehicle to finance small business loans in fiat currencies, so that those businesses can then go out and buy inventory and do what they're doing. So this is a huge innovation toward the idea of Bitcoin becoming spendable, but also something that can be deployed and used today.
Great. So are there Bitcoin holders out there looking to put their money to work? And how would this work? It gets converted, and how much would it cost a small business owner?
Yeah, so at the end of the day, if you're a small business owner, right? So what LQD does, one of our core values, is really focusing on that borrower experience. So from our perspective, it should be seamless to the borrower, right? There should be only advantages. So the advantage to the borrower is, if Bitcoin is another form of investment grade asset that can come in and provide fiat currency liquidity to borrowers, right? That's a good thing for borrowers because that means there are more loan options, okay? But it should not create any complications or a weird process. It should be seamless from the borrower perspective. So focus on a great loan product is still number one, regardless of whether it's Bitcoin or US dollars or whatever, right? From a Bitcoin holder's perspective, at the moment, if I own Bitcoin, my primary bet is that the value of Bitcoin is going to go up, and so I'm going to get a return. Well, if I hold US dollars, right, I take those dollars and I invest them in other things, right? And so the idea is, how do you give holders of Bitcoin a way to invest their Bitcoin the way they would invest US dollars? You can't buy stock with Bitcoin, right? So one of the ways you do that is you say, look, we'll give you a way. And, obviously this is where the innovation comes in. How do you actually achieve this? We'll give you a way to use your Bitcoin as a mechanism to participate or invest in small and medium-sized business loans. And that way you can actually earn a return of, 10, 11, 12% on your Bitcoin above the appreciation value of Bitcoin.
So first, how does it work? You come into the marketplace as a small business owner, you apply for the loan. Is there a different underwriting, or is all that still the same?
No, everything is exactly the same. I mean, the worst thing you can do is introduce an innovation, but then destroy everything that works well, right? So this was one of the issues in, I would say, early fintech lending. It was all tech and no fin. And so the idea is, you want to innovate gain more efficiency, but without a loss of accuracy. So underwriting stays the same, borrower experience stays the same, loan structure stays the same. The only difference is instead of taking, let's say, dollars, US dollars from an institutional investor and just using those dollars to fund a loan, what we're doing is we're saying, look, you Bitcoin holders out there, we're going to give you an opportunity to take your Bitcoin. We'll put that in our mousetrap, put it out as fiat dollars. That gives borrowers additional loan options, but it gives you Bitcoin holders a way to earn a return on your Bitcoin besides just the appreciation of the Bitcoin value.
So how has been demand? Do you see a lot of interest from Bitcoin holders, or is there going to be a lot of liquidity to get a lot of loans out there?
Yeah, so the platform will actually formally launch later this year, but we've done a lot of market research, and obviously we've been talking to a lot of stakeholders in Bitcoin, and everybody who hears about it is super excited. They think it's a great idea, it's a great innovation. Nobody's done this before. A lot of people, say I kick myself for not having thought of it myself. So it's definitely something that is getting a lot of market support. I think a lot of people are interested, and I think it's going to be, I think it'll be a big deal.
Are there any issues with the price, how it fluctuates so much, or that doesn't matter at all from either side of the equation?
So that's the big issue. The big issue is if I make a loan, let's say I make a loan for $1 million, right? And that loan is essentially backed by $1 million of Bitcoin, right? So this is currency exchange risk the same way you have other currency exchanges, right? So the idea is, well, what if Bitcoin falls below the value of the loan, right? So I pledge them, let's just say I put up $1 million of Bitcoin to finance $1 million loan in dollars, but Bitcoin falls. So now the Bitcoin I had previously had that was worth $1 million is worth 700,000, right? So this is where the real engineering and innovation comes in, because how do you set up a marketplace that largely automates that counterparty risk? So we have mechanisms in finance, whether those be hedging instruments, whether those be swaps. There are existing derivatives, and other mechanisms right now that manage this in other contexts. What we're doing is we're bringing in those same mechanisms to create that marketplace as it relates to Bitcoin. So we're essentially acting as a market maker.
Excellent. Who is this for? Is it small businesses with X amount of revenue? Are you going after those with bad credit? Is there any like a sweet spot for a business owner?
Yeah, so like in our case, we don't really do subprime. One of LQD's differences, so the businesses we target are sort of lower middle market, medium-sized businesses. So typically they will have revenues of anywhere between 5 and 100 million. Most of them will have revenues of between 10 and 50. And our debt facility sizes range from 500,000 to 10 million. Okay. So that's kind of the range LQD plays in naturally. As part of this platform, we will be making smaller loans as well as our core loans. So we're actually going to do loans as small as 250K as part of this platform. But the outward facing side of it doesn't change very much, because at the end of the day, if you're a lender, you're still a lender. You still have to make good loans. You still have to manage a portfolio. That's mission number one. Like, you can have all the bells and whistles and innovations in the world, but if you're not making good loans, it's for naught. So from our perspective, we think that we're in a unique market. We're, known as a very strong underwriter. We've had excellent performance, less than a 1% charge-off rate since inception. So for us, this is a stepwise innovation in the right direction, but that doesn't mean that we change our core fundamental values as it relates to credit discipline.
So you mentioned early on about someday borrowing money in Bitcoin and using it. When do we get to a point where small businesses can take out a Bitcoin loan and purchase stuff for their operations?
So from a technical perspective, that's not very far. I mean, we could theoretically do that on day one of having deployed our platform. The question is, okay, great. Now you sent me all this Bitcoin. What do I do with it, right? And so that question is way above my pay grade. But I will tell you that, the move of like Tesla to accept Bitcoin, the prevalence of, things like Bitcoin ATMs. I hear Apple's moving towards Bitcoin. So the idea is we are in that early adoption phase now, right? Where people are starting to use it not just as a place to store value, but as a spendable currency. And so when it'll be widely adopted, I don't know. A lot of it has to do with stability of world currencies and things of the sort, but it's definitely trending in that direction.
So we have new loan opportunities for small businesses, or even if they're just going the traditional route. Any tips or any advice for them to get funding? I know it's kind of tough given the pandemic and what's been going on lately.
Yeah, so look, one of the things so a lot of the businesses that we work with are businesses that are going from, true small businesses, so kind of mom and pop, sole proprietor operations, and they're growing into middle market enterprise firm. They look more like a company, right? One of the things, so a lot of businesses have what's called subject matter expertise, which means, if I have a welding shop, I know about welding. If I own a pizza restaurant, I know about pizza, right? One of the areas they have challenges, I think, is in the business side of business, right? So the importance, for example, of proper financial bookkeeping, not just from an accounting perspective, but from an operational perspective, right? Having things like KPIs, what are your central metrics that help you gauge whether your business is doing well or not? Do you have a 12-week cash flow, right? In other words, we try to deliver value at LQD by telling small business owners, here are the things you don't know, but that you need in order to be successful. So we try to reduce that information cost of, if I want to build a successful business, what are the things I should be doing, right? So we have a lot of conversation about that. So I would say, one, boil your business down, the success of your business, boiled it down to, 4 to 6 central metrics. What are my most important metrics that tell me if my business is doing well or healthy, right? Understand the importance of having timely and accurate financial data, and the difference between GAAP financials that are kept on an accrual basis and cash flow. Because one of the problems a lot of small businesses we see have is they're profitable in this and that, but they wake up and they run out of cash. And they say, well, how does that happen? And the answer is, it's because there's a timing difference between when they have to pay and when they get paid. And if you're growing, that could be a lot of working capital delta. So we say, have a very good eye on your cash flow. If you don't have a 12 or 13-week cash flow model, you need to have one, right? So we try to say, look, here are the things you really got to focus on to be successful. Among them, KPIs, timely financials that are accurate, absolutely critical, and then a 13-week cash flow that's, timely and updated.
This was really, really interesting. So I want to thank you so much for taking out the time today.
It was a pleasure.
Great. Well, have a great day.
You too.